10,000 shares were issued of rupees 10 each and the money was payable in 3 installments, 3 plus 5 plus 2. Applications were received for 30,000 shares. No share was rejected and pro rata was applied. So one thing is clear, 30,000 is to 10,000 means 3 is to 1 pro rata has been applied. If you develop that table, so shares applied 30,000, shares allotted 10,000, pro rata 3 is to 1, money received 30,000 into 3, 90,000 rupees, money adjusted in application rupees 30,000, that is 10,000 into 3. And now still we have got 60,000 rupees. This money will be adjusted in the next installment. And the next installment is for rupees 5. It means we cannot adjust more than 50,000. That is 10,000 into 5, 50,000 rupees. So money adjusted in allotment 50,000. Still we have got advance money, that is 10,000 rupees. This money will be adjusted in first and final call account. In this situation, the pro rata was so heavy that it crossed allotment and it also included first and final call accounts. Let's see how the journal entries will be passed in this question. Bank account debit to share application account 90,000 rupees means 30,000 into 3. Then share application account debit to share capital account and to share allotment and to calls in advance account. For the money received against first call, I am using the account calls in advance account. This is personal account. So the amounts will be 90,000 rupees, 30,000 rupees, 50,000 rupees and 10,000 rupees. Then the transfer entry for allotment. Share allotment account debit to share capital account rupees 50,000 rupees. And there will be no journal entry for the receipt because we have already received the whole of the money as an advance. So there is no receipt entry for the allotment. Then first call is due. Journal entry will be share first and final call account debit to share capital account rupees 10,000 rupees. But this time you will get only 10,000 rupees out of 20,000 because you have already received rupees 10,000 as an advance. So the journal entry will be bank account debit rupees 10,000, calls in advance account rupees 10,000 debit and to first and final call account debit rupees 20,000 rupees. So some teachers use calls in advance only for first and second call. They don't use this term for allotment. There are different options. So you can follow your teachers or you can follow this style, whatever you like. A company issues 10,000 shares of rupees 10 each and these shares were issued at rupees 11 and the money was payable in 3 installments, 3 plus 5 plus 3, and allotment includes premium. Applications were received for 12,000 shares and 2,000 shares were rejected. A, holding 500 shares, sent the first call money along with allotment. Means this was calls in advance. And another shareholder, B, holding 600 shares, could not pay allotment money as well as first call money. In this question, we can see that A sent first call money at the time of allotment. This is the case of calls in advance when the money is received before it is called. So naturally, if he has sent the money, means first call money at the time of allotment, he will not be sent letter of demand at the time of first call because the company has already received first call money with the allotment. And another shareholder, B, he was holding 600 shares. He didn't send the money at the time of allotment and he did the same thing at the time of first call. Means he didn't send any money. If this situation comes up, means the shareholder doesn't send the allotment or any call money in time, that is called calls in arrear. As per Indian law, the company can receive 10% rate of interest on arrear, and the company is bound to pay 12% interest on calls in advance. But we are doing all the journal entries ignoring interest. So in this situation, the journal entries will be bank account debit to share application account and share application account debit to share capital account, as well as to bank account, because in this situation the shares have been rejected. It means they have been sent a letter of regret. It means they will be returned money. So amounts will be bank account debit to share application 12,000 into 3, 36,000 rupees, and share application account debit 36,000 rupees to share capital, that is 10,000 into 3, 30,000 rupees, because the company cannot credit the capital for more than 10,000 shares. And at the time of application, the company has to credit the capital of rupees 3 and on 10,000 shares, and to bank account rupees 6,000. It means the company is going to return the money to the shareholders who have been rejected by lottery. And then share allotment account debit to share capital account to share premium account 50,000, 40,000, 10,000. Share allotment account is debited by 50,000 means 10,000 into 5. To share capital 10,000 into 4, and to share premium means securities premium account 10,000 into 1, 10,000 rupees, because 5 rupees is split into two parts, 4 rupees for capital and 1 rupee for premium. Now we have to draw the journal entry for bank account debit to share allotment. This is the receipt entry. So how much money we are going to receive at this time? We have already received advance money for first call, and one shareholder couldn't pay the money on 600 shares. So the amounts will be 50,000 plus 1,500. This is the extra money of first call on 500 shares, means 500 into 3. So total 51,500 and minus 3,000, because we couldn't receive money on 600 shares at the rate of rupees 5, means minus 3,000. So net amount will be bank account debit 48,500. And how much the calls in arrear? Because there is only one shareholder holding 600 shares. He was supposed to send a check of rupees 3,000, but he couldn't send it, and that is called calls in arrear. Whenever there is calls in arrear, this account must be debited. Means we are going to make it as debtor. The money will be received later on. So calls in arrear account debit rupees 3,000. That is 600 into 5 for B. And then to share allotment. Share allotment is only rupees 50,000. This is the money due on allotment. That is 10,000 into 5. And then to calls in advance 1,500, because we have received extra money for next installment of first call from A, that is 500 into 3. It means A sent us two checks, one for allotment and one for first call. Allotment was 500 into 5, and for first call it was 500 into 3. So we got the extra check of 1,500 from A. So to calls in advance 1,500. In this way, in this question, calls in arrear has been included and calls in advance has been included. Now the due entry for first call. Share first and final call account debit to share capital account rupees 30,000. And then how much money we will receive? We will not receive any money from A, that is 1,500. So 30,000 minus 1,500, and we are not receiving money from B. He was holding 600 shares, means 600 into 3, 1800. So the net money received is 26,700 rupees. And to first call account, 10,000 into 3, 30,000 rupees, because we have to close the first call account. And calls in arrear debit, 1800. That is 600 into 3. And calls in advance debit, 1500. Means now calls in advance of last installment is being adjusted, being closed. That is 500 into 3. So in the previous journal entry, calls in advance was credited 1500. Now it has been adjusted by debiting. Now calls in advance account is totally closed. But still we are maintaining the calls in arrear account. At the time of allotment, it was debited 3000, and at the time of first call, it was debited by 1800. It means we have to receive these two checks from B, and this money will be received with interest later on.